All right, let's talk about the mystery charts and the methodology in action. So we have three new mystery charts this week. This is, I almost said its name. As you can see, it's in a nice uptrend. It's pulled back to the 30 EMA, which is a Landry light pullback. Super simple pattern there. You're just simply looking for Landry light, which is the lows of the bars. As you can see here, greater than the moving average. And again, this down here does not measure magnitude. It just measures the number of bars. So we're right at about 50 bars or so. That's a long, long time without touching a moving average. And the thing about Landry light is it's just a, I'm going to geek out on you here. It's just a really cool indicator. It's one of the simplest things. I discovered it many, many, many years ago in 1995, I think, or 1994. I know I wrote an article that got published late 95, early 96. I tend to lose track of the years now. It's been so long. But anyway, after that, somebody pointed out they called it daylight. And I started looking at more and more and more charts. And I was just amazed at what a great little indicator, so to speak, or illustrator, as I like to call them, it could be. And as I've said before, I've been in presentations where you have these guys show hundreds of buys and sells. And I don't want to take anything away from them because their system might work. But what's amazing is a lot of times they always have the ubiquitous moving average on the chart, and it could be any moving average. And what's amazing is that the entire trend that they're talking about, all the in and outs, they might have 100 in and outs, but if you look at the entire trend, it would have been caught just following something simple like Landry light. So I'm a big fan of simplifying things as much as possible. I, like anybody else, went on the Holy Grail hunt and have come back to these really, really simple concepts. So Landry light pullback, just looking for a pullback to the 30 EMA, and that's it. And you could use your favorite EMA for that, or moving average, I should say. It doesn't have to be an EMA with a TFM 10% system. As you know, we use the 50, and I'll show you that in just one second. So the entry was there. The stop was here, or is here. Okay, this one hasn't triggered yet, and the IPT is off the charts, but I just put it in there so you know that we do have initial profit target in place. Here's another one going into Friday. You can see it was in somewhat of a gradual uptrend or worked its way higher. Depends on how you want to look at that. But then it really began to accelerate higher. And that's one of my favorite patterns, is when you have that second acceleration, that second gear, so to speak, happening in the charts. And notice that it made a TKO type of move. Now, TKO wasn't huge in this particular case. I usually like them a little bit bigger. And I'll show you one in just 1 second that's a little bit bigger that could work out nicely. In fact, it's the next mystery chart. But anyway, entry was there, stops there, and then again, the IPT is off the charts. Pretty wide stop on this one, percentage-wise. I mean, when you look at the charts, it doesn't look that far away, but percentage-wise, it's pretty big, and that's because it's a very, very volatile stock. So here's the textbook TKO that I was talking about a second ago. This is what you want a TKO to look like. You want a big, wide-range bar down, like you have here. And notice that, again, gradual uptrend, nice acceleration. And then we have what I call a textbook TKO. And that's when you have a nice wide range bar, and it starts at one end and it closes on the other. Anyway, you might notice, well, the entry would be here and the stop would be there. That's why I call it textbook TKO, because everything's kind of figured out for you. And what you do is you get in right above the high of the TKO bar. You set a stop right below the low, okay? And so the entry, or the high, minus the low, or your stop, I should say in this case, would be the distance that you'd want it to travel if it triggers to the initial profit target. So let's say in this case, just eyeballing it, that's about 4 points, okay? So if it triggered 4 points above, the entry would be your initial profit target. And I'll follow up on this one in coming weeks. Now, if you have a good eye, you might notice that we did lose some momentum in here. And in general, I'm not a huge fan of markets that lose momentum. But in this particular case, I like the knockout move, and I think that may have shaken some people out. And I think that actually kind of contributes a little bit to the setup. So people were like, okay, it's still okay, it's still okay, it's still okay, it's still okay. And all of a sudden, bam, it's not okay. So these people get knocked out of the market. And the beauty of something like a textbook TKO, again, starts at one end, ends at the other on a wide range bar type of move. You know where your entry is, you know where your stop is, and the chances of it triggering aren't fantastic. And there's nothing wrong with setups not triggering. Anyway, the great thing again about them is everything's kind of laid out for you. Some of these other setups that I have, it takes a little bit more work it's a little bit more discretionary, where this is almost somewhat mechanical. All right, we have a mystery chart reveal, and this is SGMO, and you can see that it had a nice Landry light, and it pulls back to the moving average, nice deep pullback. And this is, again, a Landry light pullback, nice breakout, nice accelerated move. It kind of broke out and then it accelerated higher. It pulled back to the moving average. And this one really isn't doing much just yet. Here's all the parameters. There's the wolf parameters. We just, I think we talked about that one a second ago. If not, we'll get to it. But the entry is 240, stop 150, IPT is 330 and 0.90. By the way, if you want a blank spreadsheet, I can give this spreadsheet to you. And you just simply put in your parameters for what you want. And all you have to figure out is the entry and protective stop. And everything else is figured out for you. It's just mathematics. Anyway, entry there, stop there, IPT up here. And this one has triggered. So we'll see what happens, and I'll follow up with it. All right, 10%, TFM 10% system, where are we now? So again, these zones, and I know not to beat a dead horse, but if I don't mention what they are, I'm going to get a lot of questions. These are based on the 50-week close, okay? And this line, the top of this would be the 50-week close. So today we closed at a 50-week closing high. Notice at the top of that zone, the green zone went higher. This is the 5% line. Anything here or below is 5% or more below the 50-week closing high, and then the 10% line. So the 10% line down here would be a place where you want to think about getting out of the market if it closes below that and the moving average, and that's it, okay? And there's the rules for sells, and the initial designer's intent with this, as I've said 1,000 times, is to avoid, as Ian McAfee used to call them, the diaper change moments when the market just absolutely implodes and everybody runs to the door at the same time, and things get really, really ugly when that happens. So this was the last sell signal. If you just look at those rules, you can see why a close 10% or more away from the 50-week closing high and below the 50-week moving average. It's a simple moving average in this case. And by the way, the reason I use a simple moving average, I said I won't get into the details a year ago. The reason I use a simple moving average is I wanted to build a little lag into the system. Believe it or not, it's just the opposite of what most people try to do when they sell you a system, is tell, oh, it doesn't have any lag. It's forward looking, bullshit. All right, just demonetize. All right, now I can say shit. Anyway, bar 1, bar 2 of Landry lights in the buy is there. So that's my whipsaw filter. On the sell side, it just has to get below the moving average. On the buy side, a little bit more stringent because it does take a while for a market sometimes to get going, but they do slide faster than they glide. And if you're a pilot, don't email me and tell me that the glide goes down. Just imagine that you're gliding up on a thermal, okay? Anyway, the buy was there, and it's had a pretty good run ever since. And the Qs are even more impressive, as I'll show you here in 1 second. Now, I really want to get into a lot of the nuances of trend following, and we're going to get into quite a few of them in just 1 minute. And I thought I would be able to get to more and more of them, but there's just not enough time to cover everything I wanted to cover tonight. So I'll pick some of those nuances up over the next few weeks and then forever, as I've done in the past. But one of the nuances of a longer term trend following system, in addition to your drawdowns being abysmal, is your accuracy will be really low too. So those two things working against you. And that's why somebody like the Turtles did incredibly well for a while, because that market was just blowing and going. It's kind of like trading the shit coins right now. You're going to print money and look really good. There's a friend of mine, a Jim, young guy, and he came over. I'll show you one of the trades we did together, or at least I did it in front of him just to show him how it works. In just 1 second. But the next day he tells me he bought some crypto that he heard about on Twitter, and you got to buy one Solana or something so you could buy it through a wallet. It just seemed like a big old mess to try to do this, and I think he tripled his money overnight. And so that's going to be, where am I going with that? That's a market that's just kind of going crazy right now. And I know where I'm going with that. And a market like that, just buy-in breakouts, just basic trend following like the turtles did the breakouts, you'll absolutely print money. Now, you have to know a lot about money management, which I don't think he does. I think he's more interested in a quick buck than really learning about trading, because there's a lot to learn about trading, although it does look really easy at times like these in something like shitcoins, and we'll get to those just one second. SHYT, by the way. But anyway, the other thing I want to show you here is notice that the zones are moving higher. So every time you hit a new 50-week closing high, those zones pop a little higher. And I think Jeff's here tonight. Yeah, hey Jeff. Jeff is one of my clients, and he pointed out that he likes to get out when a market drops 5% or more. When I say market, I'm talking about an index, the S&P 500 more specifically. And his reasoning is he'll just get out the way and ask questions later. So like right here, that would have been a sell signal based on 5% drop. And right here, it depends if he's using a closing basis. If he's not using a closing basis, then he would have survived that area there. I find 10% tends to be a good round number. And obviously there's no guarantees, and I'll give you money back because it's a free system. But this system, from what I've seen, and I'd love to know when I initially published it, because I'd love to go back in and see how the walk forward testing has done. And in fact, well, I know how some of it is done. I'll show you that in just one second. But I'd like to know the exact date that I made this public, so I can go in and see how the then future returns, the walk forward returns did compare to the historical returns. And I did get in a fight with somebody once, not a fight, just a big systems designer. I told him once that his biggest drawdown was always in front of him with the system, and he got mad at me. And it's like, well, it will be, believe me, because it happens. But anyway, notice that the zones are moving higher, so that's obviously a good thing. Okay, using moving average off. Okay, so Jeff also uses the moving average. Do you use the 50-week moving average? Yeah, he said he didn't get out in this last dip here. Okay, so if you're using the 50-week too, then only when the 50-week is above. See, this is good information, Jeff. I'm glad you're telling me that. So Jeff might be onto something here, okay? So I figured 10% was a good round number, and the 50-week moving average is my whipsaw filter. But notice for nearly this entire trend, the 50 is actually below the 10% line. But over time, through the drop-off effect especially, this 50-week moving average will start moving into those zones, because you're dropping off crazy lower prices, I guess 25, 30% lower prices in this particular case, 60% into Qs, which I'll show you in just one second. And you're adding in these much higher prices, so that moving average will start catching up to price more and more and more. But that's interesting. Okay. Oh, you're using a 30. Okay, so you're using a 30 simple or exponential. Okay, Jeff's gonna let us know what he's using there. Okay. Yeah, a few questions coming in. We're gonna get to them as they relate to the charts. Okay. Okay, here's the Qs for S and Gs. I thought it'd be fun. I know you want to party with me, to buy 100 shares. I'm like, what the hell? I've got a signal here. I knew I had a signal, and I said, well, let me just make a quick back test on this. And I just kind of went in and looked at it and said, it looks pretty good to me. So I went ahead and took the trade, and I just bought 100 shares just so we'd have something to talk about. I never dreamed it would go this far, and I took the drawdown sheet out. I'll put it back in next week, but the drawdowns are pretty tough in here. There's some $6,000 and $8,000 drawdowns on this silly little 100 share position. And like the hokey pokey, that's what longer term trend following is all about. And that's why, by the way, we take a hybrid approach, which I'll harp on a little bit more later in the program tonight. But we take partial profits when we hit that initial profit target, just in case that's all we get. In a lot of cases, that's all we get. But the real money is in the longer term trends, as you can see here. So to my shock, I am up $206.32 on this position, which equates to almost a 65% run. And on that silly little position of just 100 shares, that's a $20,000 gain. It's like I've looked at it over the past few days, and my equity, I'm going like Is that really $20,000 in that position? And should I get stopped out now, and I'll talk a little bit more about drawdowns again next week, that would be a healthy haircut going all the way from 521 all the way down to looks like 59. So I hate to use the word hope. So hopefully all these numbers will catch up to the price, or just even better, price will go higher and higher and higher. But it will be a bit of an ouch when it gets hit, but that's what trade following is all about. And there's been quite a few ouches in this along the way. All right, real quick, I just want to show you what I've been talking about lately with the Landry 100. And as I've said before, I did this years ago, and for various reasons, I quit doing it. It's not a tremendous amount of work. I do enjoy doing it, but I think back then I had some extra tracking software, which made it all work a lot better. But anyway, all these stocks were just bought at brand new highs. That's the entire system right there. Now I do put a little spin on it, so I guess I need to fully disclose this. What I'm doing is I'm sorting the new highs by historical volatility, okay? Which I have for TC, I have for Metastock. I don't have for TradingView. I'm sure somebody has it for TradingView. One client has the code, or was working on the code. I was helping him for Nirvana systems, so he has that one. So if you have a package and it doesn't have it, let me know. We'll see what we can do about that. Stock charts ACP, it's called Landry Volatility. I didn't invent it, believe me. They just put my name on it because it's with the plugin package, which is free, by the way. And I might actually tell them to start charging for that. It's been free for about the last 4 or 5 years, but maybe it's time to charge. I just figured give everything away and make it up in volume, you know. Anyway, so all these were bought at new highs, and I was kind of shocked a few days ago. This APP actually was over 300%. Now it's at 288. Now, there's no profit taken in this. This is a breakout type of trend following system. And I think the reason it works is because there's 100 stocks. And I think it was Jeff or someone in here knows a lot more about statistics than me. And he was trying to figure out whether or not we can make a smaller universe of these, because it is kind of hard as an individual trader, at least, to go in and buy 100 stocks. Maybe if I have an extra million laying around someday, which you don't have if you have kids and pets and family and all that other good stuff and hobbies, I might put 10 grand into each one, and I think that'd be a lot of fun. Again, I don't know, part of me. By the way, I do treat cash as an asset class with this. So when the market starts getting choppy, if I can't find 100 stocks, it might go down to 50, it might go down to even less. But to my amazement, this one's up 288.5, and that was bought on 9/11. So this day here, it made an all-time high, and it pretty much never looked back. Now, keep in mind, a lot of these, I'll buy them at brand new highs, and the next day they get absolutely creamed, okay? And then they consolidate, and a lot of times they take off again. And that's some of these huge winners in here that you're seeing did exactly that. So that's about 300%. So I think if you just bought on an individual basis, if you just bought a few of these, your chances of capturing that 300% move are very low, okay? Okay, Keith, that's a good question. And in fact, I'm glad you reminded me of that, because that's the next thing I wanted to throw out there. I'm not scaling out of any of these, and I thought about it again. This is all sort of hypothetical, although I track it every day using real numbers. Okay, and one thing I did think about is maybe exit half if you're up 100%, and so now this one's up 300%. So I just want to see where it's going to go. And right now it's all for S and Gs. I think in the real world, it wouldn't be so much fun and easy to run. And yeah, that's a good question. So should I, and I'm kind of opening it up for discussion, should I sell a half of the position when I'm up 100%? In that case, in that way, you'd be free rolling. And that's something that I strongly believe in on an individual stock trade basis, on something like a Landry light pullback and things like that. So good question. I'm glad you reminded me of that.